Well, good evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Monday, and we're now at the 9th of September, 2024. Time about 6:20 p.m. This is the week we're going to get CPI and PPI, but I don't think they matter. Don't get me wrong. I think it matters in the sense that they keep falling, but I don't think it's going to matter to what the Fed does. I don't think they're going to move the needle one way or the other. I think the Fed is going to discuss 25 or 50 basis points. Do they want to get ahead of the curve and go with 50, or do they want to send a stable message and say we can do a 50 if we have to in November, another one in December, or a 25 and then another 50? That's the game I think that we're in. When I look at everything else, no, I don't think the stock market's going to fall out of bed and just go down. If anything, the numbers, as much as they're weakening in the economy, are on a relative basis still strong. I mean, folks, I don't know how to tell you. You still have job creation of 140,000 jobs. CPI is going in the right direction. So is PPI. The economy cooling is going in the right direction, and it's not crashing. I think these are all very important things. When we talk about the metals, I'm impressed that the gold market's holding the 2,500 level. I've said I'm bullish. I will remain that way. I was looking for a bounce to get the dollar. Looking at it, I think it's going to fail on this rally. We'll see if I'm right or wrong. When we look at the other currencies, it's sort of a mixed bag right here. Bitcoin went down today, touched into that 55,000 level and got a bounce away from it. And bonds and notes are marking time. They're up here, they're going pretty much sideways. When we look at the gold chart on a close-only basis, on a weekly chart, this is an all-time high close. And what did I tell you? I said you get the noise on the chart from the swings that you see when markets do this. But when you just went on a close on a weekly basis, you're still up in that area. You see the resistance. You can see the near-term support in the market. So let's say that the 2,500 level is your support zone. Let's say that the 2,570 level is your resistance zone in there, and the market's marking time back and forth. The pattern on the swing line is one of lower highs now with this action, and certainly from that low to that low is a lower low. But what's happening is instantly, if you take a look at the market tonight, the high is 25.3610. If we come back one more day, today's high was 25.3650. So if we take out that high, you will end up with higher lows, lower highs. In other words, this market's just sort of hanging right here, trying to see what's going to happen next. And how often do you watch me on these videos and I say markets that were in uptrends like to pull back? They challenge often the 18-day average of closes to see what they're going to do next. This market hasn't announced that. The market is fighting its battle, and if you don't believe me, well, just look how many days now, day after day, you're hitting that 18-day average. That's what I believe the market is doing. As it's doing that, volatility is coming out of the market. As the volatility comes out, the nature of the algorithm called the Bollinger Band narrows in. The more it narrows in, the tighter it gets. It's like a spring. Price is the spring inside of a pipe. It'll come out of it one way or the other. That's what I think you have going on. And in the interim, the market had been in a bullish condition. It's lost it, and now it's no longer overbought. It's getting into a neutral stance here. So I think it's not a market ready to be bought or sold, but I think it's interesting from the long side. The gold-silver ratio of silver-gold is still favoring the gold market as the market's over the 18-day average of closes. Silver chart looks nothing like the gold. It's not a market challenging the 18-day average. It's been with lower highs, lower lows, but it is oversold. The one thing I teach investors or traders, either one that they are, is you don't put new money into oversold or overbought conditions. Wait for the market to give you a better opportunity. Is the market bearish still? Absolutely. Is the resistance at, in my opinion, 29.37? Yes. It would have to get over that and take out the zeros number to say, no, I've neutralized the bear trend, but there's nothing on the current pattern that turns the chart, in my opinion, bullish. You can negate the bear trend. In the copper market, I wish I could say I'm a bit surprised, but I'm not. You came down, made one run at the lower Bollinger Band, and you bounced. Look where the resistance is showing up on the rallies. So you still have a market. It's sort of like silver. You have a market that's oversold. I wouldn't want you to deploy new money. In fact, it's out of it tonight. If I come back to yesterday, here we go. You had a market that had a reading under 30. It was oversold. With tonight's action, neither number is there, so you're coming out of oversold. The resistance is the 18-day average and then the 200 right above it. A close back over this arrow, and in this case, we can go there and look at it so that we look at the number, would be 417.65. That gets me interested in the market saying, okay, it's proving it can't get under this number, even with China's malaise that they're having, and they are having a bad one where they're just going down like that at this point. Now, they have deflation close to happening. If you looked at their CPI numbers over the weekend and so on, you see what's going on. There could be turning. And if they get into that, well, then they'll be exporting deflationary numbers because their goods priced in the yuan, market down. That's what starts happening. That helps us. Why? Because the cheaper goods, we're not importing inflation for them. We can lower certain parts to make ourselves more competitive as well. Not everything we import from China is an electric vehicle, steel, or aluminum markets that we keep putting tariffs on. There's a lot of everyday products. In fact, how many in your home do you think is made in China? Get ready to be amazed. It's one after the other. They're even saying now that on farms in America, that the Farm Association came out and said, I think we should look at what the farmers are using, because many of these drones that their farmers use over the crops, and they can be programmed in hundreds of ways. Years ago, no more than 4, maybe 5. My friend was on the board of ADM. And I know they were going with seeding programs and all with these drones, and we had long talks about it. And it was just a fascinating part to this. But I never took into account they'd be Chinese drones. I never thought about it that way. And the fact that that's there, what does it do? Can the drones relay information back? I don't know. But that's the thought process that the farms brought out. In the platinum market, you can see you're coming up to challenge this high. That'll negate the downtrend, and this thrust in the market is down. The question is, what does it do as it tries to establish a trend against this 18-day average? Is it going to be up or down? It hasn't told you. So the metals are sort of right in one of these zones here, moving around, not saying that. In the dollar, the short-term rally today is interesting. The weekly charts didn't turn up. The daily chart did. If the market's going to fail, it should fail right here at the 18-day average and flip-flop very quickly. If not, are we getting more of a rally to 102.50? You could argue that's a possibility. Why is what I don't get, because we're about to embark on cutting rates. That's not bullish the economy. That is a sign that, in my opinion, that the Fed thinks the economy's tipping over, and tipping over, you got to start cushioning the break that it has. That, to me, is not bullish the dollar. So, you put that all together, and it gets to be a lot of fun. Now, tomorrow you're going to get the National Federation of Business, the NFIB, with their numbers coming out. I would expect there's not going to be a big change up or down. Red Book Group will come out with their weekly retail sales. They've been over 5% just recently, so that's interesting. Now, this is a cause of concern about the U.S. consumer. This afternoon at 2 o'clock, the Federal Reserve U.S. consumer credit headline came out. And they were looking, I swear, for a 0.3 increase, not for this market to go up 120% or so. They were looking for $11 billion. They got 25.5. The revolving credit shot up to 10.6. Non-revolving, the 14.8. The share of auto balances that have become at least 30 days delinquent. With this report, what did it come in for July? The biggest since 2010. What about the share of credit card debt that was now newly delinquent? That rose to 9.05%, the most in nearly 12 years. So if you think this tells you the consumer's getting current, You're dreaming. They're living on credit right now. Otherwise, these numbers would not be this high. You're liable to say, well, they're one off. Well, we'll see the next report next month. I have my doubts about that. Again, one of the things that we offer is an awful lot of information. And if you go to our website, irapstein.com, you'll see on the left side, free offers. When you choose these, you just select the offer that you want. It'll be on a page that looks like this. Just scroll down the page and away you go. Put it into your basket. And as you finish all this, they'll ask you to put in your name, your email address, and we mail everything out to you. We typically get it done in about a 48-hour process, as long as a weekend or a holiday not involved. I'm Ira Epstein. irapstein.com, free offers. We'll have an icon up here as well. You can click that, and we'll talk to you tomorrow. Have a great day.